and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan from the Mumbai studio. Here are the top headlines that we're tracking today. Swiggy's losses jumped by around 80% in FY23 to $545 million from around $300 million in FY22. According to its biggest investor, Prosus, the share of revenue in the company grew 40% to $297 million, pegging Swiggy's revenue at around $900 million.
PayU India had generated total revenues of $399 million in FY23, up 31% from the previous fiscal year. Even as overall income saw a bump, the company's revenue growth rate slowed from the 47% witnessed in FY22, as per Prosus.
Arkam Ventures launches its second fund with a target corpus of $180 million, nearly doubling the size of its maiden fund. Through Fund 2, the VC wants to build a portfolio of 20 tech startups.
EV startup Oben Electric raises 40 crore rupees in an extended pre-series A round and also announced it will start delivering its electric motorcycle Roar to customers in Bengaluru from next month. The company has so far secured a total funding of 88 crore rupees, including 72 crore rupees in the pre-series A round.
Stakeholders raise concerns over the proposed Digital Competition Bill. 58 organizations and individuals urge the government to call for public consultation, urge it to get smaller stakeholders on board for greater transparency.
WhatsApp business application is now catering to more than 200 million users on its platform, a fourfold jump from about 3 years ago. Meta CEO Chief Mark Zuckerberg said Meet to begin testing features which will help small businesses run ads that click to the messaging platform without the need for a Facebook account.
Okay, those are the headlines we're tracking for you today on Startup Street. Now today, small, micro and nano entrepreneurs are key to the growth of any economy. In India, MSMEs contribute nearly 30% to the GDP and employ more than 11 crore people. On World MSME Day today, we put the spotlight on nano-entrepreneurs who have a turnover of less than 1 crore. There is no specific data or policies that cater to this specific MSME group, which makes up almost 80% of micro-entrepreneurs in India. So to talk about the impact that they can have and how to solve their credit problem, I'm now joined by Geeta Goyal, who is the Managing Director of the Michael Susan Dell Foundation in India, and Sucharita Mukherjee, the co-founder of Kaleidofin. Geeta, Sucharita, thank you very much for your time here on CNBC-TV18 and welcome to Startup Street. Geeta, I'll start with you. You know, this lack of data around the segment of entrepreneurs is one of the key challenges that your report also has highlighted, and you've been working with others to collect data around them. So start by giving us a sense of what the key findings have been. What is sort of the profile of these nano-entrepreneurs?
Sure. Thanks, Ritu. As you know, the foundation works at maximizing opportunities for children and youth living in urban low-income areas. Given the large scale of MSMEs that you talked about, 65 million, nano-entrepreneurs is a key segment of that. We estimate enterprises with turnovers of 10 lakhs to 1 crore being 11 million of the 63 million MSMEs. Now, this is a distinct segment and it's not defined anywhere. Its needs are different and it gets glossed over somewhere in the bigger landscape of MSMEs. To your point, the segment is ubiquitous. It includes the Kirana stores. It's the last mile delivery outlet for large FMCG companies. It's the last mile supply chain for large, production houses, small screws gets manufactured in these. It is also where a large part of our consumption economy sits. So, tailors, street vendors, food stalls, etc. And yet, the only data we really have is the size is about 11 million. They employ anywhere from 1.8 to 2.5 individuals. And in our study with CREA or IFMR that you talked about, the significant finding was that if given credit support, these enterprises actually have the ability to grow and employ more people. There is data to show that enterprises which start with investment capital of more than 2.5 lakhs actually have a 3x higher survival rate than enterprises that start with lower capital. Similarly, enterprises that actually take loans of over 1 lakh or 1.5 lakhs have actually 35% better profitability as compared with enterprises taking smaller loans. So I would say, given they are 11 million, given they employ people, they have the capacity to grow. They are sort of the wheels of the economy, which are important to continue to sustain and grow them and actually collect more.
This lack of data is specifically interesting when we talk about the availability of credit. And Sucharita, let me bring you in, because typically with MSMEs as well, collateral offer comes up as a challenge when we speak to lenders. And traditional finance may not always find it profitable to expand or expend their resources for such small ticket loans. There's risk aversion and all of that. What can we do in terms of better underwriting models to solve this problem, predict better outcomes, and what's really needed as a solution to this credit issue?
You're absolutely right, Ritu. Most of these nano enterprises are informal, completely unregistered, so they can't really provide the collateral. Also, they don't have any income documentation that is typically required to access financial services. The other feature that's quite unique is that they have very, very volatile financial lives. So implementing the same Equifax credit score is not really optimal. But thanks to initiatives like the India Stack, which has produced a very, very deep data footprint, as well as the Microfinance Credit Bureau, as well as the account aggregator, we have actually used literally the power of tech, big data, data science to create a supervised AI-based credit scoring model. It's called chi-score. This is a credit underwriting model that actually predicts the probability of default, and which actually also understands and distinguishes between different types of customers. And it understands that a week of delayed payments is simply a part of the inherent financial life of this customer. So over the last 5 years, we've actually been able to gather about nearly 20 million nano business data points, which has helped us build this model. And the risk on these loans, and we've underwritten about 2.8 million of them, is now less than 1%.
Yeah. All right. Geeta, let me come back to you, because the general belief is, and very briefly, if you could answer, small entrepreneurs come with higher credit risk and lower recovery avenues for lenders. What do the numbers say here?
Yeah, to Sucharita's point, I mean, they have a proof point where, their scored enterprises actually are less than 1%. Several of our other NBFCs, which cater to this segment using, algorithms focused on this segment, would have losses in the range of 2 to 4%. So it is not very different from the rest of the market. These losses are priced into the interest rates. Briefly, Ritu, the point is, the segment, if assessed well, doesn't show much higher risk. It does need to unlock more credit to the segment. We do estimate the credit gap to be anywhere from 5 lakh to 10 lakh crore, which is a large number, but it's definitely an addressable market. And the current digitization and formalization trends are helping, grow that market.
Hopefully that bursts some of the myths. But, before we wrap up this conversation, Sucharita, a quick word on whether schemes like the Credit Guarantee Fund have worked, and, what have been the learnings from that can be applied to nano entrepreneurs?
So credit guarantee schemes like CGT SME have actually worked really well. They've provided over 56,000 crores of credit. They can have a tremendous implication for nano entrepreneurs. There are some changes that the government has recently proposed to these schemes, including increase of the interest rate cap, which will make many, many more nano entrepreneurs, because of the higher cost of operations, much more eligible. Also, the eligibility process has been streamlined. What I think really needs to happen is that mainstream lenders, such as public sector banks, private sector banks, can team up with credit platforms which cater to nano entrepreneurs, make use of these credit guarantee schemes, and really make nano entrepreneurs a mainstream asset class.
All right, Sucharita and Geeta, thank you very much for your time here on CNBC TV18 and for talking about this category that clearly needs a lot more time and attention. On that note, we're going to move on. On this occasion of World MSME Day, Network 18 has launched a special campaign to celebrate the entrepreneurial journey of MSMEs, from embracing digitization and innovative technologies to defining the roadmap for India at 100. Take a look.
This World MSME Day, celebrate the entrepreneurial journey of MSMEs, from embracing digitization and innovative technologies to defining the roadmap for India at 100. News 18 Network and Misho's one-of-a-kind partnership is uniting entrepreneurs and visionaries to accelerate the India MSME sector through dynamic fireside chats and panel discussions, and applaud exceptional sellers who are shaping a future-ready India. Mission to 100 million, presented by News 18 Network in collaboration with Misho.
It's now time for our special segment, Voices from the Valley. Over the last week, we've been bringing you stories from the front line of what's being called the biggest technological innovation of our times, generative AI. Today, we take a trip to a cloud kitchen in Palo Alto, California, where we get a glimpse of the future of restaurants where artificial intelligence is the master chef. Celebrity chefs Tom Colicchio and Roy Yamaguchi are now investors in the startup alongside Anand Rajaraman, an early investor in Facebook. So can one really cook like a Michelin chef in 10 minutes? CNBC TV18 Shereen Bhan steps into the kitchen as the sous-chef to the AI master chef. Take a look.
When you look at food, food has always been brick and mortar. Food has always been anti-scale. So if you imagine the best food that you've had in your life, it's either from a grandmother that has given it to you, or some restaurant that you've gone to which is only one, maybe two or three, not more than that, outlets. Here with Cloud Chef, what we're trying to do is being able to scale any restaurant from anywhere in the world to anywhere else in the world. And we're employing AI and software to do that. So what you will be doing right now is cook like one of the operators in a kitchen that we power. And I will walk you through how it's being done while you cook it.
Okay, so essentially you're saying that somebody with no skills of having been in a kitchen can use this technology to be able to prepare a dish according to a celebrated chef standards, etc. But how is this then different from a recipe book?
Correct. So when you're following a recipe book, you need a large amount of skill, and you need to be able to do that. In order to be able to do that at scale, it's really hard, and that's one of the main reasons why food hasn't scaled like music or audio, wherein you can listen to Pink Floyd sitting anywhere in the world, but you can't eat from your favorite chef sitting anywhere else in the world. So here, what we have done is we've boiled down that process to such a great degree of detail using sensors and AI that somebody who has no skill can make it. So if you had a tremendous amount of skill, and if you were as skilled as a Michelin star chef, you would be able to make a Michelin star meal by looking at a cookbook.
Okay.
But right now, you're able to replicate a recipe from a highly celebrated chef back in Bangalore who has cooked it once in their life in our kitchen.
Okay.
And we are able to eat it anytime we want here in Palo Alto, and you will be able to.
Okay, so you're essentially addressing a problem of scale and quality and consistency. But who would the typical customer be for a product like this? I would imagine the Michelin star chefs are not looking at expanding significantly. They like to keep things where they are. At the lower end, the McDonald's of the world are already significantly automated. So are you addressing the middle of the market?
Okay.
What's the size of that market?
Correct. So we are starting with targeting chefs and restaurateurs who are locally popular and want to scale their presence. So an example for that would be a Michelin star Michelin star restaurant that wants to now scale into fast casual and spread that across the US. If you look at categories in the US, even at the lower end, there is no Chipotle for Indian food, or there is no Chipotle for Italian food for that matter. And we want to enable either chefs who have a lot of local presence, who want to scale internationally and globally, or YouTubers and food content creators who've been who have a wide distribution today, help them serve across the country. And we think that that market is huge, and over time we think that all of the food that's getting cooked would be cooked using computers and not human beings, and in that world we'll all be able to have whatever we want whenever we want.
I asked Anand this question. I said, aren't you worried about a chef flash knives out is going to have a whole other meaning at the end of this, right?
Not really, because we think that this will help chefs scale significantly farther and wider than they are today. Today, chefs just monetize off of their labor. Tomorrow, they should be able to monetize off of their ideas globally, just like how musicians and artists are today. So we don't see local musicians fighting to throw established musicians out. It's everybody wants to be the established musician. That's what we want to enable.
And grow the pie.
Yes, and grow the pie. Yeah. So every time this progress bar is done, you can
Add the base gravy. It hasn't given me any red alert so far, so I guess I'm doing okay.
So despite all these recipes that we get to try.
Remove output, okay, that's it, it's done. Wow.
Yeah, so instead of the packaging container, since we're all going to have this together,
Yes.
we're going to put this into.
Add garnish with coriander. So this is it, it's done?
That's done.
That is my Rajasthani paneer, which I have made from scratch with a little bit of help from the cloud chef, food tech, food AI that's been helping me with putting this together. Now the true test is going to be in the eating, so
Yes.
we will find out if we've been a success or not.
Well, Chef Artificial Intelligence and Chef Shereen Bhan bringing you that paneer. Wonder how that tasted. But on that note, we're going to take a short break. Up next, Arkam Ventures launches its second venture capital fund of $180 million. We'll put the spotlight on that when we return.
Welcome back. You're still with us on Startup Street. Arkam Ventures has launched its second venture capital fund of $180 million. The firm, which has invested in companies such as JAR, CreditBee, Jai Kisan, Jumbotail and Scienzy from its first fund, will look to make early-stage bets in around 20 companies from the second fund. With Fund 2, Arkam will continue to build a thesis-driven concentrated portfolio by going deeper in its existing sectors, as well as identifying category leaders in promising areas like manufacturing, tech and EVs. Joining us now to discuss this further is Rahul Chandra, the MD of Arkam Ventures. Rahul, thank you so much for joining us on Startup Street today. Like I said, you've launched your second fund with a target size of about $180 million. When will we see the funds being raised? Talk to us about the kind of investors interested in this round. How excited are they about the Indian startup landscape in the current environment?
Hi, thanks for having me. Yeah, and we're excited to announce the launch. So this is the third year from the time we closed the first one. We were very fortunate to actually have significant institutional support. And in addition, we had a bunch of large family offices in India backing us in Fund 1. So at this point, when we've announced, we are sitting on 3 years of history of actually following a very process-driven and where we have stuck to the theme that we started off with. So when we look back, we've been fairly diligent in the companies that we've invested in. We've been very measured. So investors actually, especially institutional investors, like the fact that what you set out to do is how the fund has been invested. Mm-hmm. So when they look back at the 3 years, I think there is a lot of comfort in the fact that we are thesis driven and our stage and sectors, etc., fall into the category that we talked about. So where we are sitting right now, we are obviously getting encouragement from our existing investors to call out a fund right now, and there is support around the table. Mm-hmm. And then there is also the India shining aspect right now. India is one of the largest markets in the world. Right. Globally, it is one of the biggest startup opportunities. There is US interest that is shifted from China to India for tech, and that's helping us as well. So there is that tailwind that's going to help us. We're looking at a October 1st close and a end of the year final close. Okay, so October 1st close and end of the year final close. So there's a lot of investor interest in the India story, like you said. So through the fund, you hope to build a portfolio of 20 tech startups. So talk to us about the kind of companies you're looking to invest in. Are there any that are on your radar currently? What will the ticket size of these investments be? So we are early stage investors, so pre-Series A to pre-Series B. And what we're looking for are really companies that have identified a problem and they've constructed the product that will then address that problem. Our target audience is the middle India segment, which is 5 lakhs to 20 lakhs in family income annually. Right. And for them, the sectors that matter, where 80-90% of their wallet share goes to, is food, agriculture, healthcare, financial wellness, skilling, mobility. Correct. These 5 sectors are really square and center for us. And the business models that can achieve scale, because what we count as middle India consumer is about 400 million people who are underserved and they are tech ready. And for them, this digitization of middle India that's happening, that is the driving trend for us. So we're looking for companies and founders who can actually innovate around the India stack, the digital India stack, which includes UPI, Aadhaar, etc. And then build products that are innovating around that. So what we are expecting, these startups to actually deliver on is tens of millions of customers in whose lives actually some of these products are making tremendous difference. So a big opportunity there in the middle India market, but you're also strongly eyeing the manufacturing, tech and electric vehicle space. So what's interesting about these companies and what's the opportunity here? So India is, again, the second tailwind that we are seeing is the India plus one or China plus one, where manufacturing out of India is being considered by a lot of global manufacturers. India has thrived actually on being a more specialized player, which is then where quality can be driven. And there are certain segments of customers out there. Manufacturing in India is in 2 parts. One is manufacturing for the world and manufacturing for India. Both are hugely underutilized at this point. And I think the first wave will be where Indian manufacturing serves India needs, and then it goes to serving global needs. The formalization of the sector is in 2 parts. One is how do manufacturers get access to customers and how does the buying process then convert into a digital buying process? Right now, it's very broken. And the second one is, a steady supply of customers where the capacity planning is done better, where then it leads to more investments and increasing the capacity for these manufacturers. So digitization is working in the manufacturing sector beautifully right now because one, it's aggregating a lot of smaller capacities, shifting, demands on an as needed basis. It's also marrying the blue collar workforce, the labor force, which has got different levels of skilling. And the government is actually emphasizing a lot on getting the labor force to go up the curve on skilling.
Right.
But there is no efficient ways of measuring that and no efficient ways of delivering that. For example, millions of workers cannot be taught the same way, just like the EdTech solution.
Right, absolutely.
If they need to, so there has to be technology driving that. So these two are the two exciting things for manufacturing.
All right. And from your first fund, you invested in about 16 new age companies like JAR, CreditBee, Jai Kisan. What are the kind of returns you're seeing? Any exit plans? How's your portfolio doing?
So portfolio, we measure portfolio on a day-to-day basis in terms of the build process, right? Not so much the outcome. And the input side of that, again, is happening. Our founders are really nose to the wheel. Since 21, we have also guided in terms of cash utilization and just stretching the runway. So on an average, our companies have a cash runway of 40 months. We feel very comfortable with how much runway they have to build and, markets to turn. Number two, they've raised sufficient capital. So just in the end of 22, we've raised about 225 million in the portfolio. So that, again, is a testimony to the attractiveness of these companies being able to raise capital in a down market. And I think we break companies into 4 buckets, going through all the way from business model to be proven and all the way to being category leaders. So we count about 5 companies in our category leaders where they have taken the pole position in new markets that either they have created or which they have digitized. So companies like Small Case,
Right.
which are building the full tech stack for ETF, JAR has created the whole saving for Middle India.
Right.
CreditBee is the largest digital lender in the country. Jai Kisan is the biggest agri-fin company. So we are seeing
Absolutely, Rahul.
the appearance of category leaders from the portfolio.
So some strong companies that are in your portfolio, but we've completely run out of time. Thank you so much for joining us on Startup Street today.
Thank you.
All right, on that note, we've wrapped up. We will wrap up the show. Thank you very much for watching. It's a goodbye from Arundhati and me. But stay with CNBC TV 18 for all your latest news and updates.